Hey, welcome to the 40 Finance channel, everybody. Today, I'm going to put together at least what I think is a diversified tech portfolio. So we're going to put 10 stocks together that I choose with the goal of maybe balancing out some of the overexposure that you hear a lot of people talking about, both with top-heavy ETFs like the QQQ and the Mag 7. It's very top-heavy right now. And in particular, right now, with the strength of NVIDIA and the chip industry as a whole, you have what I would say a lot of overexposure to the chip industry. Now, I certainly agree that as technology grows, the demand for chips grows with it. So it's sort of a 50-50 proposition there. But with this diversified portfolio, I'm, of course, going to limit the chip exposure that we can have. And as always, as we're going along today, you'll see a lot of screenshots of Seeking Alpha Premium. If you're interested in learning more about this awesome platform and potentially supporting my channel along the way, check out my link in the description. You get a 7-day free trial as well as a discount on your first year. Now, anytime we do something like this, we obviously have to have some objectives, a goal, instead of just throwing darts at a wall. So here's what I put together for this diversified tech portfolio 2025. The objective is be overexposed to the tech sector, right? Because we're specifically talking about that. But we want to limit industry exposure. And I used the example of semiconductors earlier today. Now, as far as performance goals, we want to exceed the performance of the XLK on an annual basis. So the XLK is the Spider Technology Select sector fund. So if you're building a portfolio based on sector funds, you would certainly have the XLK in there to represent your technology. Now, one connection you may not have made with the XLK versus something like the QQQ, all stocks have to be in the technology sector. So you see the top holdings here, and you wouldn't have a Facebook, okay? You wouldn't have an Amazon, because those stocks technically are not in the technology sector, which brings me to my next point on the objectives. We are going to allow for sector exceptions. So something doesn't have to be defined as a technology sector stock. However, the goal will be that all stocks are heavily tied to the technology industry. And of course, you can dispute the picks in the comments if you'd like to. But what this does is allows us most notably to dip into the communication sector where you have stuff like Google, Facebook, I'm sure, and probably Netflix is in there somewhere. But it does give us some more flexibility when we're talking about things like industrials, consumer discretionary, medical, stuff like that. So I'm allowing for sector exceptions. And it's going to be a balanced fund. So it's not going to be top heavy because it's supposed to be a different approach to maybe a QQQ, right? It's going to be a balanced fund. So on paper, all 10 of these stocks, and we got a +1 in there, I'll talk about at the end, but all 10 of these stocks are going to have equal distribution in this imaginary portfolio. All right, so let's take a look at my 10 stocks. I sort of broke them into categories / industries, if you will, hardware, infrastructure. And of course, you have to have semiconductor exposure. There's no way around it. And I just don't see what you would pick outside of NVIDIA at this point, being the leader in the space and what that stock has done. You can argue it's overvalued, but we're trying to look ahead, maybe 5 or 10 years. And my best guess anyway is that NVIDIA will be leading the pack. Now, I did add another semiconductor-related service, if you will, ASML, who builds the machines that build the semiconductors. And one of the reasons I wanted to sneak this one in here is first of all, it's an international stock. And then secondly, it kind of lowers the risk of just having NVIDIA as the sole semiconductor stock. So I threw ASML in there. All right, next, you got to have a cloud storage, cloud computing, some sort of mega player in there. You could choose Amazon in theory, but I'm going to go for more of a pure play on the cloud, and I'm picking Microsoft. And I'll be honest, on the Amazon front, if you were expecting that, their ties to consumer discretionary and e-commerce as a whole was a negative. For me, you could argue that it's a more well-rounded stock, I guess, but I really want to focus on the cloud, and I think Microsoft's doing a good job. I think they're also heavily tied into the corporate space, and that's a little safer than banking on consumer spending, if you will, on the cloud front. All right, next up, as far as software, you could choose from a million of them. I went with ServiceNow. You could have done Twilio. You could have done Salesforce, HubSpot, you name it. But what I like about ServiceNow is, again, they are in the enterprise money space, and that means big clients, and they've got a lot of them, and they've proven time and time again that they're capable of adding new services that bring home more dollars per customer. So ServiceNow for me on the software front. And you see there at the bottom, cybersecurity. You have to have cybersecurity. I'm going CrowdStrike. I sort of like Palo Alto as well as Fortinet. So I considered those. But at the end of the day, CrowdStrike, it is probably overvalued in theory, but the growth numbers for this stock, I mean, they just continue to do double-digit gains on both the top and bottom line, and I took a look at the estimates earlier. That does not appear to be slowing down anytime soon. All right, so our hardware segment included 5 stocks. That leaves us 5 slots. I'm going to go consumer discretionary. It's a little bit of a risk. I just talked about how I focused on enterprise up here. But, ultimately, if you're going to make money, if the stock market's going to do well, the consumer has to do well. There's no other way around it. If the consumer doesn't spend, stock market is not going to go up. So I do want consumer discretionary exposure. For my dollar, Netflix is basically the cable company of 1980, and I mean cable TV. I just got my email that they're raising my subscription plan, and now that they've dipped into sports and special events, I just don't see that you would ever have a route of unsubscriptions, and we still have the rest of the planet to play with when it comes to Netflix. They are in other countries, but the U.S. has been their focus so far. They're going worldwide. There's no doubt about it. Now, social media, love it or leave it, it's still a huge part of people's day. And, the amount of hours that get wasted on social media is absolutely insane. And I think at the end of the day, Meta's done the best job at monetizing that. Obviously, there's an ad play in here, and then you have all the other stuff as far as AI, the metaverse, so to speak. And I like that when it comes to social media with Meta. I think that they still have some opportunities to spin off new growth areas. So that's my pick there. Then I've got travel. So travel, huge part of spending, certainly in the United States, and Booking Holdings has continuously hit their goals. And while Booking Holdings is technically, not a technology stock per se, their whole MO is technology into the travel space, right? So connecting customers to travel opportunities and sort of controlling that market in the way that people search and book their stays. Next up on the payments front, I have Visa. And if you follow Visa, you know that it might as well just be called a technology company. They do not make their money off interest rates, things like that. It's all transaction volume. It's all connecting digital dollars across the world. And when it comes to performance, certainly over the past 10 years, all they've done is continue to outperform. So I like Visa as somebody who can represent the payment side of technology in this diversified portfolio. All right, last industry here, medical. And there was a lot of ways to play the medical. I tried to stay out of pure drug companies, even though you can make the argument that they're heavily tied to technology. So I went with Intuitive Surgical. This is the company that basically uses hands-on technology, robots, all those things to assist doctors in surgeries, amongst a million other things. This stock is expensive, but when you look at the growth rate for what they've been doing and how I think their industry as a whole or their focus as a whole is going to permeate, for the next 20 years, I really like Intuitive Surgical Group. And then last on the board, which, you probably noticed, I do have Bitcoin. Okay, now I didn't incorporate it into this diversified portfolio because the goal was to talk about stocks here. But I think at the end of the day, you have to think about whether or not you would add Bitcoin if you were to mimic a strategy like this. Maybe it's not equal weight. I don't think I would do equal weight. But if it was me building all of this, I would definitely include at least a slice of Bitcoin into this diversified portfolio. All right, so here's the Diversified Tech Portfolio 2025. I threw it in a sort of made-up portfolio in Seeking Alpha Premium so I could track it. But we had NVIDIA, ASML, Microsoft, ServiceNow, CrowdStrike, Netflix, Meta, Booking Holdings, Visa, and Intuitive Surgical. Now, what's funny is one of the things that you'd have to do on a portfolio like this is to get to that equal weight point. It would have to be something different than shares, okay? Because you have a company like Booking Holdings, that's a $4,800 share price, and you got Netflix at $1,000, ServiceNow at $1,000. So the weight right now is way off. You have Booking Holdings, ServiceNow, because I just did one share per stock just to get it loaded up here. But you would likely, if you're starting out with a small amount of money, you would almost certainly need to think about fractional shares to really make this a balanced fund. So I've got this thing loaded up. We'll sort of watch it over time and kind of be able to come back and compare it to the XLK. Let me know which stocks, it just drives you bonkers that I included them, which stocks I probably missed. But if you're going to add a stock, you have to subtract a stock. So if you're going to leave a comment and say add Amazon, you might want to suggest, what would you take out? Would you take out Netflix, add Amazon? A million ways to do it, but I'd love to know what you guys think. And don't forget, before you go, check out that special offer for Seeking Alpha Premium down in the description. I hope everybody's doing well. We'll see you on the next video.